Olugbenga. Glad to have you join us on Power Lunch West Africa. So more talk about liquidity within Nigeria's fixed income space now. I see sparse liquidity when you talk about the FX market. I see sustained liquidity. You just give me a clear picture to you. What's the liquidity situation of Nigeria's fixed income space like at this time?
Okay, thank you for being here. For the fixed income market, what we're seeing on the short end of the curve, which is the treasury bill market, we're seeing a lot more people sell off the short end of the curve because of they're trying to fund their CRR debit, which happened yesterday, Monday, and since Friday. CBN is trying to debit and meet up with the 27.5 new guidelines, so we saw people sell off. On the bond side as well, we saw a bit of sell-off as well. It wasn't as magnified as the T-bill side, but people are just basically trying to raise liquidity.
So, Benga, if you say they're selling off at the short end of the curve, where are they taking their investments to? Should this be assumed to mean preference for the longer dated tenors, or are they taking the monies outside of the fixed income space generally?
As you remember, the last MPCs, CBN raised the CRR ratio to 27.5, so that additional Naira provisioning is what people are trying to fund for. So this money is going to go to CBN at 0%, so it's not like there's a choice, but it's just the reality of the fact.
So going specifically into the treasury bills market, could you give us an insight into how investors have been responding to trading activities within that space?
Market today is a bit more quiet. People have funded their positions. There's above 300 billion expected maturity this week on Thursday, that's tomorrow. That should calm people's concerns. And after that, also the rest of the month, there's also a bit more maturity than previous months. We also have a bond maturity this month of above 600 billion. So that should reduce people's concerns going forward. So the market is a bit more quiet. What we expect to see is that as these maturities come into the system, people would look to put that money to good use. So we start buying T-bills and bonds again.
Is the current yield trajectory within Nigeria's fixed income space attractive to investors at all?
To be honest, we're seeing negative real returns in fixed income securities, given where inflation is and where yields are in the market. But to be honest, except you want to convert your money to dollars and move out or to invest offshore, there's really no choice. Except you want to, what CBN is trying to do, they're trying to spur growth. They're trying to tell people to bet more on themselves, go into manufacturing, create more industries, create more companies. But except people are willing to take that risk profile, you really don't have a choice. You put your money where it's available, and for now, in terms of risk-free assets, that's what you have to do. You invest in T-bills, you invest in bonds.
So, Benga, we hear conversations of a series of commercial papers expected to hit the market. How do you reckon the market will respond to these papers?
I expect the market to embrace it more, especially as they offer a premium to where risk-free rates are. And given that some of these corporates are A-rated companies, where we have Nigerian Bearish currently in the market to raise a commercial paper, so people have a bit more confidence in them. So we expect them to embrace it a bit more. It's also on the short end of the curve. It's not in more than 1 year. I think the highest is about 270 days in terms of CP. So really, we expect interest to be focused there, given the premium against risk-free rates.
So what will be your near-term outlook for Nigeria's fixed income space?
To be honest, we expect, in terms of fixed income space, to be a bit more bullish. At the end of February, we expect a bit more calm because February has the largest maturity for a while, over in terms of trillions of naira coming into the system. So after that, we expect market to be calm and just play within the liquidity space. But let's say by the end of Q1, we should still be net down in terms of yields, at least another 100 basis points.
Benga, many thanks to you for sharing your time and thoughts with us on Power Lunch West Africa today.